Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. We are going to look at something really important. Number one, volatile volatility. What am I talking about here? Of course, the markets are topsy-turvy. I'll give you what you need to know. The second thing is that China takes another step. I'm going to show you what they've been doing, and it connects in with all of that which we've discussed previously. The third being that this right now today is an inflection point in the markets. We could tip either way. I'll show you all the data. Let's begin by taking a look at this Bloomberg article. Billions in wrong way ETF bets placed just before Thursday's rout. Largest VIX fund was ditched before the biggest jump in 5 months. So as the VIX, which is a measurement of volatility in the stock market, was going down, 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 of course, we hit this huge swing up. And it shows us, particularly with retail traders, but it also applies to, big investors and so on, where we see that exactly at the wrong moment. That's when they buy in. When the market starts to go down, 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 they sell, and then, you see the market coming up. And it's the other way. People buy at the very top, and then the market goes down. It's always at the worst possible time. When we see more and more enthusiasm, that's usually the sign that it goes in the opposite direction. So many have started to suggest, okay, well, everybody is bearish, everybody is pessimistic, so we might be going in the opposite direction now. Well, these are the four broad US indexes, and you could look across here and see that over the last while, it has certainly been mostly bearish. And this has been going on, depending on which index we look at, since towards the end of March. But we have to understand that other than the Dow Jones, we look at these markets that are in bear territory, or at least a correction territory. The Dow Jones has fared better than some of the others, but we have to look at how many very prominent stocks that were doing so fantastically, not just since 2020, but even the years prior, have been turned upside down right now. Okay. This is just showing us that investors had bought ARK and TQQQ, among other funds, before the slump. Imagine a triple leveraged fund betting on the NASDAQ to go higher and instead starts to go down. So if the NASDAQ went down by 5%, you're down by 15% in a single day. That hurts. And imagine if that happens 2 or 3 days, 2 brutal days. Well, now you think to yourself, I'm down 20, 25%, and this is just over a couple days. I'm got to hold on now because I want to make my money back. And that's what happens here. I don't think people should be holding leveraged investments like this over a long period of time. Although some do. In some cases, actually, that's a terrible idea because of the way that they do invest. It depends on the type of ETF it is. But this is just showing us, different examples here. Okay, cash in, cash out. TQQQ posted the inflows before the big Thursday drop, and you could see that right there, percentage change. And like I said, minus 15% because the market was down 5% for the NASDAQ. Okay, and all they're trying to say here is that when the markets went in one direction, people went in to buy this dip, and then they got smashed. Okay, so there's a lot to that. You could see it here as well. Famous volatility ETFs are back after a wild week on Wall Street. Funds known as the UVIX and the SVIX surf huge stock market moves, yet watchdogs are mulling new tough rules for complex products. So I think that a lot of people are getting into these. They don't know what they are, but they're saying, hey, it's triple the money, so I'm going to do it. I don't need to have $100. I could just have $33 and have the same output. But people don't understand that's triple the risk, triple the potential loss, not just triple the wins, especially in a time right now where there's so much volatility. Now, this happens to be volatile volatility because it's the volatility of the VIX. That's the measurement. You're betting Is it going to be very volatile, or is actually volatility going to decline? And in this case here, people are getting smashed. At one point, the UVIX, which rises when the markets are choppy, surged 42% in Thursday's rout before closing 37% higher. Like, think about that in a single day. We're not talking about some penny stock. We're not talking about some dog crypto coin. This is the measurement of volatility, and it was up 42%, assuming you sold it at the peak. I mean, it's crazy. How to navigate turbulent stock market depends on when you want to retire. This is a Bloomberg article, which, if you read it for yourself, what they tell you is that, listen, if you are seeing volatility in the markets, the key is to simply hold. Don't sell. Don't sell your stocks. That's bad. You need to hold on for dear life. They literally use that term here. Hold on for dear life. Is that a strategy, really? I mean, do you, the viewer, watching me right now, do you believe that holding on and holding and holding and holding on for dear life, is an actual strategy? Please let me know. Put it in the comments below. What I worry about right now is, as you see with Zimbabwe, an extreme example, obviously, but they've imposed capital controls to stem the currency's slide. Now, I'm not sure why they even have this $2 bill. I mean, we know what has happened in the past. Massive hyperinflation. Some believe the worst ever in history. You look at how bad inflation is. But there was a period when, we could say it was moderate. They had moderate. So how do we go from moderate to extreme? How? And also, what is the time frame? Well, let me tell you. I have studied every single monetary asset inflation that I can find, that I can read about. Some extreme examples and some, small little bits, but I've done my best as a student to read into this. And I will tell you that there is a constant in all of these crazy times, and that is it happens faster than most people can cope with. It happens faster than people expect. That's the constant. Now, what is that time frame? Sometimes it's a year, sometimes it's 5 years. I mean, who knows? But I know that it happens faster than people can cope with. Okay, that is the constant. And so that's what I wanted to say, that people should be aware of this. Capital controls can screw you. Not even hyperinflation, but heavy inflation can screw you. I mean, you could be taken to the cleaners. And on the other end of the spectrum, we see Warhol's Monroe portrait set to smash records at New York sales. So whether or not it's this Warhol, whether or not it's some Leonardo da Vinci that they dig up from somewhere, or who else, we are seeing that some people have more money than ever before. So while we have consumer confidence dipping down significantly, while we have some serious problems with the consumer, debt rising, credit card usage, all this, there are other individuals buying up paintings, buying up NFTs. Actually, NFTs have started to kind of wane. But the point is that we have yachts, like all these things. And there's just a small group of people. And I believe this small group of people are going to be able to buy way more of this stuff in the coming years. China orders government and state firms to dump foreign PCs, personal computers. Beijing aims to drive foreign PCs out of the government. Campaign to kick out at least 50 million foreign-made PCs. Actually, this is surprising to me that they would have even allowed it in the first place. But you would think not for individuals, but for the governments. And so it's state-owned entities as well. But you can see here that they're trying to get rid of that. They want domestic production, domestic consumption, and less reliance on foreign governments at all. Do you see what's happening? I see it. My opinion, very clear. Absolutely very clear. They are saying we do not want the influence from these other countries. We can manufacture this ourselves. We're doing it. One example being Lenovo. Lenovo, huge company. They are out there. I believe it was IBM basically sold off their hardware division. They renamed that as Lenovo. Quality actually declined. But anyway, what we can see is that this example here is just one of many actions they are taking. CNBC breaking news just came through. Beijing loyalist John Lee will be Hong Kong's next leader. So there we go. More things are happening inside of China. Just want to keep you up to date. Now let's look at this inflection point. NYSE Composite Index and its 100-week moving average. We are right at that moment. If it breaks through here, chances are we are in for a much deeper crisis. Right now, we are at that moment right there. So if we get some more bad days this week, watch out. Look up below. Net flows into all equity and bond funds. So we're looking at how much cash is moving into bonds, how much cash is moving into equities. And the long and short of it is that it's going down, down, down. People are selling. This is about cars. Mannheim used car index has declined at the fastest pace we have seen in this particular bubble. The Mannheim index is the wholesale index. And we are looking at this, haven't seen this actually since the global financial crisis. And if you look at this, maybe I should show you this one here first. Though the used car index tracks wholesale pricing, Mannheim estimates that retail used car sales declined 13% month over month. Time will tell how this will unfold. So we are watching that decline. And then we have this, which is opposing information. Car Guru's index shows a dip and then a recovery. This right here is just like the listing prices. I don't think it's necessarily something we should go off of, but when I have opposing information, I want to bring that to you. So we had seen the prices of cars going up considerably, used cars, new cars, I mean, anything to do with the cars, the metals, all of the, infrastructure, everything more expensive. Are we seeing demand destruction? And are we seeing a significant drop in the prices of goods? Is this it? Is the recession imminent? Many people are starting to say, yes, that's the case. If you appreciate this information, hit that thumbs up button. That's how you support the channel. I'll see you on the next one. Take care.